So we're going over N phase. N phase, okay, we're looking at its growth rates. It's growing 10% from last year to this year, 5.19 divided by 6.75, 15%, 6.75 divided by 8.65, then 12%. So it's grown around 12% on average for the until 2025. But look at this, from 25 to 26, it's basically not earning, it's not growing. So that's not good. I'm not sure what that is, but a lot of times estimates in the future aren't that accurate. So let's say they're growing at 12%. And let's look at, they're growing at 12%. Their PE is 32. Okay, so that makes it around, you divide 31 by like 12%. That's 2.5 times overvalued. And that PEG ratio for Yahoo is 1.6. So it's not very compelling for me as an investment. Why are you interested in it, Mark? What's your thesis?
I like solar energy. I think it's the wave of the future. I have panels, so I think there's growth potential.
Okay, all right. That sounds great. Well, we have some theses that I understand. California is trying to become energy independent. Kind of, they're forward thinking. A lot of people in California have incentives to install solar panels. So they're saying that a good portion of rooftops in California are going to be solar. So that's one thing that I know is a catalyst for this stock. Other things, a catalyst for this stock might be government subsidies that might come up because Democrats might push for that kind of thing in the future. Other than that, I'm looking at the growth rates. It's still not, for me, like a long-term holder. I'd rather it go down to like $100 a share where it's a fair value before I buy it. But if you're willing, I guess the one thing about this stock is they have, they're constantly beating their estimates. You don't see a whole lot of negatives, in their estimates there. So that means they're constantly getting, offering more. They're providing more in their earnings than expected. So that's really good. But I guess we'll revisit this another day. Okay, here's the big picture for the stock market. We have, this is the last week of July. We had an FOMC meeting on Wednesday. They raised rates a quarter point. We have an expectation of a really good week because July has been a really good month, one of the best months of the year. And you can see from this graph that usually you have an upswing in July because of earnings. They come out the last part of the month. Problem with August, September, you don't have earnings, a whole lot of earnings coming up. So you don't have like a natural catalyst for stocks. You have like a doldrum a time. So that's why in our map here, I have August as, red or yellow. Let's say it's not exciting because earnings aren't coming out. There's not a whole lot of things going on. We don't have another Fed meeting next month. It isn't until September we have the Fed giving more understanding of what's going on with interest rates. So right now we have a rally going on in the stock market. Let's look at Yahoo Finance and some of the things that are happening here. Okay, so it's up 1%. It's the S&P. Let's look at. Okay, let's look at the stochastics for the S&P. Okay. We've been quite overbought for a couple weeks now. You can see it's like levitating at the top end of the channel, so we're overbought. We've been overbought for a while now. But one thing that's different between now and other times is we have momentum in the stock market. So if you click this link right here, it gives you this understanding of how far we are above the 50-day moving average. And we're right now we're 68%, so that's less than last week. So market breadth is a little bit worse than last week, but we do have momentum, and that's whenever there's more stocks moving above their moving average, and it's really hard to stop that. And momentum in the stock market, because there's a fear of missing out, and there's a lot of people that try to meet their indexes, and when you're a mutual fund or a hedge fund, so you're forced to have to pile into the things that have worked the best, and that's kind of what's happening today. Let's look at the sectors that are doing good and bad today. Utilities. Okay, so it looks like we have another flip. We have the conservative sectors doing the worst. Utilities are the most conservative sector. They pay dividends, and the sectors that are paying dividends, that are conservative, that we did really good last year, are the ones that aren't rallying today. The ones doing the best, we have oil exploration doing good. We have gold miners. Technology is doing good. So these are all great. We have a risk on day today, so that's kind of matching. It's kind of matching our fear of missing out theory that's been happening for a while now. So whenever people are whenever there's momentum in the stock market and people are excited, people just pile on until there's a catalyst downward in the market. Right now, looks like we're almost out of earnings season. Most of the companies have reported already. So the 2-year and a 20-year, they're just basically not doing a whole lot. They're not telling us. We're not as concentrated on that anymore. Let me see. Okay, so we have, what else do we have here? Okay, so the U.S. dollar has been weakening. We've been saying that would be good for the tech stocks that do a lot of business overseas, multinational companies. And we saw that in earnings reports. We had Google come out with earnings, Facebook, almost every one of the tech stocks except for Microsoft is rallying after earnings. So that is really good for the whole stock market, because they're leading. The big stocks like the Magnificent Seven are leading the way. So what else do we have to know here? Okay, so we're moving towards, this is the last week of July, so we're going to be moving towards an unfavorable seasonality of the year. And here's the other look at it right here, these months. So let me see. So I'm expecting us probably to check back to this lower end of the end of our channel during the next couple months. So don't be excited or too afraid whenever it happens. I put some articles out here about, I've been following Eli Lilly for a while now, and originally I started looking at this because Jim Cramer was super excited about their weight loss drug, and he was excited about their Alzheimer's drug. And so I did another look at what was going on in some of the news. And a lot of times whenever you have news for a company like Eli Lilly, you have to look at the competitors too, because their competitors for Alzheimer's and this weight loss drugs, if they have problems, then that's better for Eli Lilly. So it's like for me, it's like a 1 and a 0. Whenever it's either going to help your company or hurt your company, or it has no effect. So I guess that's 3 different outcomes when you read a news story. So this one right here, there's a news story about Ozempic and Wegovy. These are 2 drugs from Novo Nordisk that are the leaders in weight loss. They help people lose up to 12 to 20% of their weight. And there's a huge bad news story about their stomachs getting paralyzed. So people are going to avoid taking this, and that's going to really give a lot of business to Eli Lilly once they get their ball rolling with this weight loss drug. But they have trials that say they lose up to 26%, and it's the highest, of any weight loss drug that's out there. So this could be a really good catalyst for the company. And on top of that, they have what Kramer says is the best Alzheimer drug, and it's better than Biogen. So that could be the holy grail that could be the best-selling drug of all time. And we're going to talk about the current best drug seller of all time a little bit later with AbbVie. But right now, we're going to take a little look at Eli Lilly just to see if it still makes sense and if their earnings still make sense. Okay, right now, I just looked at this is E-Trade. I got the earnings estimates. And it seems like last year to this year, they were growing at 9%. I just divided these two numbers. These two numbers come out to 30%, 27%, and then 20%. So I'm thinking we can average, they're growing at 27%, their earnings. And if their PE right now is around 52, that is really rich. That is a super rich premium. But, you pay for quality. And, this is one of my only drug stocks. So I tried to be diversified in buying this, and it's turning out to be almost a growth stock instead of a high yielding stock. It only yields 1%. So it's kind of a dividend growth stock. But you can get the PEG ratio by dividing 52 by its growth rate, 27, and that makes it 2. So it's 2 times overvalued. Right now, the stock is, let's look at Eli Lilly. Okay, so if you take the current price of the stock and divide it by 2, that's what, it'll go down in a really bad news environment. I have it because I forced myself to diversify into drugs. I didn't really want to buy this, but it's turning out to be pretty good, and it has the thesis is they have new drugs, and they have existing drugs that are performing well, but their new drugs in the pipeline are going to be super powerful. So let's see if that happens. The important things for Eli Lilly, their profitability is 20, our minimum is 10, and return on equity is 54, and that's better than the 10 we want for return on equity. So that's really good. And their Yahoo Finance says they're 1.76 in their PEG ratio. So they're still a bit pricey, but people are paying a little extra because of the promise of maybe a really good Alzheimer's solution. I looked at Morningstar just for kicks, and I looked at what they're saying about it. The latest price is $447. They say it's 20% overvalued. Their comments were phase 3 data should support this Alzheimer's drug approval in the end of next year, sometime in next year. And we expect the Alzheimer market to be split between them and Biogen's competitive drug. So it seems like Jim Cramer says their drug is better, but it seems like that could be the next growth driver for the company. But Morningstar agrees they're a little bit overvalued. And so right now, CFRA, a different company that does this, they said they're overvalued by 34%. That's kind of matching our idea that they're overvalued right now. So in a really bad market, it'll go down 34, maybe even half of where it's at now. But they still have all these things going for it. Whenever I'm looking at, this is CFRA's charts, looking at the earnings, you can see that they're not very consistent. I like to see 2, 3, 4, 5, 6, in a straight line up. But this is the world. Whenever you're investing in drug stocks, it's not as reliable as a tech stock. They have their ups and downs. They have sometimes they make money and then patents expire. So it's not as reliable an industry. But you can see that they are growing over time. and they have to make investments because of expiring patents or whatever. So right now you can see the PE. They're over time, what people are willing to pay for the stock is going up. So they're getting a premium. So right now their average PE is around 20, over the past 10 years, and now their PE is almost double that. So it's definitely selling at a premium, but I'm holding this long term because I believe that I have to diversify my company and my portfolio. So whenever there's a stock market crash or whenever the tech stocks are crashing, this will be maintaining a certain amount of stability to my portfolio. Okay, so let's look at some of the major variables in the stock market. The oil is up a little bit. Inflation, we had a good inflation number from the Fed this week. So inflation is going down, and I'm not sure if that's right now. The Fed might raise the rates one more time next 2 months from now. But the U.S. dollar is still going down. It's up this week a little bit, less than 1%. Gold isn't doing anything. Okay, so that's so when we look at oil is the biggest factor whenever people are making products. So because people have to ship things, people have to make things out of oil, and so that's why we keep track of the price of oil. Let's look at some more things. The fear and greed index. We've been extreme greed for 4 or 5 weeks now, and it's going down just a little bit, but still there's a fear of missing out. So we're looking at our emotional gauge. People are buying like it's the year 2000, and there's people are excited about AI, and right now things are really we're approaching probably the worst time of the year. So we're at this spot right here, and just when people are saying, "Oh, markets can't go down," the trees don't grow to the sky; they'll eventually come down. So you have to be ready for these fearful moments, the capitulation if some bad news story happens. But the thing is, when we're investing, you have to understand what the fair value of the stock is, and a lot of times during the capitulation times, the stocks return to their fair value. For instance, Eli Lilly, it'll return to like maybe half of the price it's at now during a bad market, and you have to be willing to hold the stock through that time because I think Benjamin Graham said that the stock market is a weighing machine, not a vote. It's a voting machine, not a weighing machine. So it's just if it's in favor or not necessarily what it's really worth that it's selling for. Okay, so the dollar index is still going down. It's in a downtrend. So we expect the multinationals to still do really well with this, as maybe a 5 to 10% help to their earnings. Let me see. The VIX is still at lows, really, really low. So that confirms that people aren't afraid and they're buying stocks. All right. So now, I mentioned earlier about AbbVie, about how they basically we're following this stock as just a part of the dividend part of the portfolio that we're looking at here. And AbbVie is actually, we were afraid that they're losing their patent to Humira. So I think they lost their patent, and so people are expected to switch to the generic version, and that's the best-selling drug of all time, Humira. And so once they lose that, they have to replace it with other drugs. And it seems like people aren't switching as fast, so they still have a certain amount of revenue from Humira, and there's new drugs that are actually doing good. But for me, it's been a dividend stock. I bought it when it was yielding 7%. It's 4% yield right now, so it's part of the dividend growth portion of my portfolio, it's a pretty big position. I have like 4 or 5% of my portfolio is this stock, but I think Eli Lilly is a little bit more. It's a little better of a stock for a growth portfolio. I did the numbers for AbbVie. You can see that they lost 25% of their estimates over the past year, from last year to this year, due to Humira being off patent. And so now they're looking to other drugs to help their pipeline. So that's the story for this stock. And looks like they're going to be growing at 9% a year if you divide the years. So if we divide 23 by 24, you'll get 9%. So that's not that exciting. But, for a stock that's growing consistently at 9%, that's a 4% yield. And so that's a 13% total return, which isn't that bad. So I'm not going to sell it. I'm not going to. I'm still interested in it. It's not compelling as maybe Eli Lilly, which is growing a lot more. But this has a really big yield, so I think it's still worthy of following. And we'll see if Humira, if people just totally switch over to the generic. If they do, then I don't know what's going to happen to the stock. So we'll watch it just for fun. But their earnings were great. They popped a little bit this week. Let's look at Morningstar. Morningstar said they're 20% overvalued. And they said they have these new drugs called Skyrizi, and they're increasing their fair value a little bit. See. So they expect declines in Humira because it's there's biosimilars now. And they have a blood cancer drug that not selling as much of due to there's new competition. So it's so for drug stocks, they're off and on. They'll drop 20% when the drug doesn't go through trials or something. So you have to keep track of that fair value. Right now it's 20% overvalued. So whenever it gets down to a fair value, that's probably a better time to buy it. I bought it whenever it was like 2000, whenever the COVID crisis hit, and I thought it was a dividend of like 8%. So that's the reason I bought it. And now I'm like, it's not as compelling a stock, but it's still growing. It's going to give me a total return of 13% over time. And it only has 2 stars. That's not so great. So let's see. It's still sketchy because it's losing the best-selling drug of all time. And if they lost 25% in the last year, there's a chance it might lose more going into next year, and that could be bad. So we'll see. Anything else? Oh, CFRA said about they said the fair value is 129, so they're overvalued by 10%. Their earnings, I looked at their earnings, they're kind of growing. They're kind of inconsistent. They're growing, but you can see in 2020, they had the COVID, everything was shut down. People don't use as much drugs, I guess. We can say that's acceptable, but they're going in a straight line, so that's good for the growth side of me. In the PE ratio, they've never had a really good valuation given to them. They only have a very small PE. Let's look at their PE. It's 13. Most stocks like Eli Lilly have a PE much double or triple that. So it's because you can consider this kind of a value stock, but it's still risky. Whenever you're investing in drugs, you gotta understand that there are drug trials. Whenever a drug doesn't pass a trial, it'll go down 10 or 20 or 50%, and you got to be willing to stomach that. So that's why I don't have a whole lot of my money in drug stocks, because it's really hard to buy and hold a stock that's a drug stock, because it's off and on with selling drugs. All right. And so there's another article that kind of agreed with that they're still overvalued by 20%. This article said. Okay, I'm gonna Is there any questions anyone had? Anything you wanted to go over? Okay, no questions. All right, let's look at some of the market movers right now that's going up the most and the worst. So you see the top decliners. We have, the theme is solar companies. We have Solar Edge. We have Enphase. Okay. These are a lot of these are conservative companies that pay a dividend. So whenever there's a fear of missing out in the stock market, people are not interested in some of the stocks that are more conservative. The ones that are going up today the most, we have Tesla, we have Intel. Intel, basically, they were unprofitable for a while. Now they turned a profit, so that was exciting. That stock. We have T. Rowe Price. I don't know anything about these.
Roku is up today 25%.
Why?
Really? Where's Roku? I didn't see that. Roku. Let's look at the NASDAQ. Okay.
The NASDAQ, yeah.
I don't see Roku on there. I wonder why. Let's look at it just for kicks.
Roku is one. Refresh it. Okay, I don't know. Yeah,
Roku is one of those stocks that has a very high PE ratio that Kathy Woods from the ARK was investing in, and so I guess this is why ARK is up a lot today. This stock basically doesn't have any numbers that we could understand it better. I mean, they don't have a PE. Look, all these numbers, NA, price to sales.
Yeah.
Negative. This is super, super dangerous to invest in, but it's going up 25%. So let's look at the chart on this. So we can't really know. I guess I'm sure Kathy Woods has her theory on this. This is basically is it a streaming company? They sell hardware that allow for streaming. I guess they give you a piece of hardware. No, you buy a piece of hardware and it gives you a certain number of channels, and with advertising, so they get a little money for advertising. Q2 earnings, but ad headwinds loom. Okay, so I guess whenever you get this device, you have some channels that go through the hardware, and you get them through the internet, but they serve up ads on these stations. So they sell reruns of old movies or TV shows, and they sell ads on it. I think that's what their business model is. Muted TV. Okay, that's strong earnings beat Q3 outlook. All right. Well, Kathy Woods was right. I gotta admit it, but it was. Look at this before. It was up to 473 before. Now it's down to 80. It's really hard to value this. This is, what that is short covering. Whenever it jumps up 24%, and there are just too many people betting against it, and they all pile on at once, and to buy it, and then it might be, but it's definitely nothing we can sink our teeth into. Warren Buffett wouldn't touch this because it doesn't have any past history of earnings. Let's look just for fun. Let's look at Roku to see if the earnings estimates. It's probably negative, like all negative numbers. Okay, let's look. Oh man! This looks so bad. Okay, so they're not profitable yet. So whenever you're investing in this company, you got to realize at any point in time they can go bankrupt if they have these negative numbers. But it looks like they could be profitable 5 years from now, 3 years from now. I don't know. Looks pretty sketchy to me. And their estimates are negative, so they lost less than expected this quarter. It is super, super risky. I wouldn't touch that. Okay, let's look at what else is happening in the stocks moving up and down for the NASDAQ. We have PDD. This is the one we were looking at the other day. They do software for, I think like if you want to make a website, they'll help you make a website or something like that. That's interesting. How to leave? Okay. These are all earnings stories because this is earnings season. We have a lot of companies jumping based on the earnings that just came out. The ones that are going down the most, the more conservative companies like Exxon, they're a utility. A lot of utilities not doing good. Charter Communications, they're kind of a utility. Comcast utility. All right. The Dow. Procter & Gamble just came out with good earnings. Microsoft, let me see. One's doing the worst. Okay. Can't get anything from that. All right. That was good to go through that. Let's go through some more talking points. All right. First, let's go to Yahoo Finance. Okay. Inflation. Okay. There was a, Fed's preferred inflation gauge showed a continued downtrend. Okay, so we got some more good news on inflation. So that's continuing to help out some. You see, that's one of our talking points is reasons the stock market would go up is better news on inflation. Fed's preferred. Okay, now see what else is happening here. Okay, nothing exciting. Let me see. They're talking about potential of Congress killing credit card points. So if they make it illegal to have points to buy things, will people use Visa and MasterCard? I think they will. So that's a no-op article. It means has no effect on the long-term potential of Visa and MasterCard. So anytime you read an article, you have to say, does this affect the stock in a good way, a bad way, or is it neutral? And most of the time, you have to say that has no effect on anything in my portfolio. Move to the next story. So that's very important. That don't get too overwhelmed whenever a story comes out and you can't sell out of a stock because of a news story that may or may not have effects on your portfolio. Okay, let's look at this. Ford came out with their earnings, and they showed that the gas guzzling part of their portfolio is doing good, but the EVs, they are losing money. And it seems like Elon Musk in his Tesla company, they're reducing their prices and making it really hard for other companies to make money because they got to match these price drops. And Ford had to reduce the price of their best-selling EV truck by $10,000 last week. We were watching that. And so it looks like Ford is not expanding their EV because they're losing so much. Those losses will continue. Ford forecasts that the EV segment will lose $4.5 billion. So we had a thesis like a year and a half ago about how Ford, this could be the turning moment. They have the best-selling truck in America, best-selling vehicle, the F-150. And could they turn that into success in the EV world? And doesn't seem like it. They have a hard time getting good prices on batteries and coming up with they have supply issues. So it's looking like the thesis that I had a while ago about Ford, being a growth stock is coming to an end, like a screeching halt. Hey, that was no pun intended. And here's the Ford's earnings estimates. They're basically flat for the next 5 years. They're not expected to make money. So you get a 4% dividend if you hold this, and that's just about it. So we'll keep our eye on this. But for me, I expected a lot more from this. Anyone have any comments on this? Okay. No comments.
Also, actually, revenue jumped 12%. So it's on a positive side. It down the market is down for Ford because it's shifting its focus from EV to hybrid, back to hybrid again, and that's why it beat up, but it's still increasing in terms of revenue.
Well, I think
12%.
I think every one of these I think every one of the manufacturers promised to phase out gas cars in like 5 or 10 years. So, they got this. I think this company has to focus on efficiencies and making their EVs profitable.
I don't think they run out gasoline car anytime soon within the next 2 decades. California say that they will ban electric car, but California is always the forefront, right?
Yeah.
So wait until like a decade after California banned electric car, gasoline car, other states going to start doing the same a decade later, or maybe 2 decades later. So Ford's still making money there.
Right. So I guess, there are a lot of people who say that we'll be having the same demand for oil in 20 years, maybe even more. But they might not get rid of gas cars for 20 years either. So I don't know, but if there's legislation or some reason that they have to get out of selling gas cars, I don't know, that might hurt Ford. But it's looking.
I doubt the federal level will ever approve such bill. State level may. Like California, they already did. But California is at the forefront of everything.
Yeah, California started a lot of things that are being picked up across America. So they're pretty environmentally friendly people over there. So
if you look at the poor state other state that run a lot of heavy trucks, that like Texas, Montana, they never pick up into EV anytime soon, unless the price go down.
Yeah. Yeah. So we'll see. We'll see how that plays out. Right now, it's becoming more of a complicated situation. It seemed like a pretty straightforward. I started watching this based on Kramer gets excited about stocks. This is one of the ones he liked the most at some point in time last year, and now I've kind of proven that it's like not a growth story anymore, and this competition from Tesla is a little bit too much for them. And let's look at some more of their numbers and the Morningstar, see what they say. This is Morningstar says they're undervalued by 20%, and based on the Yahoo Finance, it says we're about fairly valued.
I think Morningstar might be owning lots of Ford stock. That's why they are saying 20% undervalued.
I don't know
these companies are so much of bull that
you never know.
Each and every analyst for this year I have seen, they have gone wrong. This year and last year, every analyst. And thanks to Kramer, what Kramer says, I just do the opposite, and it's doing good so far.
Kramer also wrong. So
that's why you should always do the opposite of what Kramer says. That's what I'm saying. Yeah.
Yeah.
But as it came for EV, I think Tesla is way ahead in the game. Ford has not even started doing anything, and Tesla is already going to different countries and already getting contracts on. Like right now, the recent news is he's working with Indian companies to set up a factory there, and then they are planning to do car setting there with the discounted, but still get a discounted. It starts with the $40,000, which is a good money for them.
Yeah. The discount still going on with the US.
Yeah.
So I'm
I'm kind of wondering if the government still subsidize the
They are
EV
still
car.
having, yeah, they're still doing it. Yeah, they're still doing it because like
I'm here.
if you're smart, you can with the subsidized price. I think they say that you can get the car for like less than 20K.
Wow.
Yeah.
That is amazing.
Hmm.
So it's becoming very, very competitive. It seems like Tesla doesn't want to give up market share. They have exclusive contracts for battery parts. They're making batteries in bulk that no one else can come close to that.
If you want to see whether Ford going to be out of business anytime soon, if you look at the resale market of Ford cars, it's still very high.
Oh, really?
It's not collapsing. So unless you got the retail or resale market for Ford car collapsing, that would be an indication that Ford will have a tough future ahead. Right?
Oh yeah,
So
because
it's not.
well, if you have quality cars, people aren't going to buy new ones right away. They'll hold them for 10, 12 years.
Hold on. Any resale Ford car tend to be out the door really fast in quality, right? So the same say for Elon Musk car, EV car, right?
Mhm.
If they are high quality and it's not going to be sales, the current user may not buy anytime soon, then they face the same problem.
Yeah, the one problem with selling a used Tesla is that as the new prices go down, like Elon's cutting the prices on the new cars, you can't ask for as much for your used car, so you have to like drop your price to sell a used car. Because
I
who's
think
going to buy used?
one of the problem of Tesla facing right now is putting a lot of restriction on used car. Basically, used car cannot get upgraded to the fast charge station. They cannot utilize that. They cannot get software upgraded and open up new feature of the car. So a lot of people not going to buy into used car from Tesla for that exact same matter issues. Aside from the battery cost, on a used car Tesla, a battery replacement is the same cost as the engine itself, half of the car, right?
Right.
So that's a lot of reason that people still not moving to Tesla for that.
Right. So yeah, Tesla, it has an interesting strategy with what they're doing. I think they have a potential of I don't know. They have a scale. They're building a scale for building their cars that no one else is really matching right now, so they can make them less expensive. Let's look at the CFRA for Ford. They have a fair value of $6.97. That means 50% overvalued right now. That kind of matches more of what we're thinking. If it's not growing, it was 0% growth, then they shouldn't trade at a premium. So right now,
CFRA is shocking Ford a lot.
we don't know about
the other guy.
Yeah, we don't know about the people at CFRA. They've been the closest for me following this. For my whole I've been following this for like 15 years. CFRA, they're closest to the fair value that I believe in. Morningstar isn't as great, but Ford has always traded at a low PE ratio, and their earnings. Look at this. This is so inconsistent. You have -1. It's not a number from the straight line from right to left. It is negative some years. Sometimes it's very competitive. It doesn't grow that much to begin with. Car companies, Tesla has grown to like 20%, but the other car companies throughout history, the last 20 years, have grown very small amounts, like 5% maybe. So that's why they have a PE of 5. But it doesn't seem like this stock. It'll give you a dividend, but it's not going to grow. So for me, I'm like a growth investor. I'm not going to be as interested in this stock anymore.
If you look at Tesla, it's not just a car company, right? A lot of people mention it's an energy company. People are going to put out charge station everywhere in America. So people buy into the hype, right? So probably stable company, so it doesn't have a height.
Yeah, let's look at the we've been looking at these earnings projections. I've been looking at that every week now. I have a theory that if somehow they become the energy company for electric vehicles, and they have Exxon-like mobile stations all over America,
Right.
that could.
But at that same point, selling point for the growth price of Tesla, the other auto companies just pour in money into a pool of $1 billion to set up charge station across the U.S. So that will be a direct competition to Tesla. Right?
Yeah, actually, this past week, I read an article where all the major
that's the one.
all the major car manufacturers are banding together to make this EV network, but
The
they
charge
still have.
station.
Yeah, that just happened this past week. So that might be they still have to use Teslas and
They don't
the
have to.
AC standard. They might have to.
No, they don't. They have their own battery. Audi have their own battery research facility and production.
Yeah, because so that's so.
There are a lot of battery company out there, not just Tesla. Tesla just one of them.
Yeah, so we didn't see that in the estimates when the article came out. We didn't see the estimates jump, and that's probably because that whole industry isn't finalized yet. We don't have that charging network, and it's still being determined who's going to be the top dog there.
No, but whatever they do, if they are successful, they're going to eat into market of potential market of Tesla in terms of energy.
You're right. So I don't know. I think Tesla, it went up 4% today. Let's look at the what's happening in the stock market again one more time to see where everything's going. We're 1.6. Okay, so we're up a good percent. We're going down a little bit, but it's a good day. This is the last week of July, so I guess people might towards the end. We know we're going to a seasonally bad part of the year. What other things are happening here today? Okay, see if I have any more. Okay, we like to review this every now and then. We're talking about how over time, the bear markets are really small compared to, the bull markets. And we knew that the rates were going up like a year and a half ago whenever they started going up. We knew that we would have some contraction in the stock market whenever the rates are going up. One thing that, as we're thinking, we're starting to go up in this bull market now, but whenever the Fed raises the interest rates, we have a lag effect. So we're going to start having some announcements in the next 2 months or so about, potential effect on the economy from these rate hikes. So that you have to assume that the stock market will go down because of that. But I think this this pattern matches what happened in this bull market and the small amount of time last year we had a bear market. That's why I chose to hold. I knew the stocks would go down when they started raising the rates, but I knew that the time it goes down is much smaller compared to the time it goes up usually. Also, whenever your odds are better the longer you hold a stock. So if you hold a stock for 10 years, your chances of having a positive outcome go up 90%. But if you go to a casino, your chances of losing everything go up exponentially the more time you spend at the table. So I think that's all I had to say here. I think I've exceeded my time. So I hope you have a good weekend. I hope you have a good investing time this week too. And if I could review anything for you in the meantime, let me know. And thanks for attending. I appreciate it. We'll talk to you later on.